Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 21st, 2011. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We've been, over the last 3 weeks, been relatively trying to remain bullish this market, suggesting that so long as the support lines hold around this 121 to 123 area, that we could end up just seeing one very big kind of flagging wedge formation lower before this market actually breaks out higher. And while we still cannot technically rule out the possibility that scenario occurring, we certainly are at a crucial moment from which the market is going to show its hand. If we break this 121 level on the downside and it ends up being a break with some sort of substantial momentum, one where we see a single drop that breaks below that 118 level on the downside, we could see a cascading wave of selling that would make this blue zone obsolete. We more or less want to tread the waters very carefully, and really so long as we remain at or above those zones, we certainly want to leave the window open for that bullish breakout on the upside. But we do want to be very cautious at this moment, because if that support line gives out and real momentum selling comes in, we could very quickly find ourselves trading within weeks down at the low at the 108 to 111 on the downside. Next year, when we take a look at the ISE US Regional Banks Index, which is symbol JLO, we have a situation very similar to that of the S&P. So far, the bulls have done a very good job to hold that 19 support line very well. But if the whole market was to begin selling early this week and we saw a break of that 19 level on the downside, it would open the window for regional banks to pull back substantially, not only to 18, but probably to even retest their 17 lows. Again, we're trying to remain open to the idea that these will all still have a bullish resolution to the upside, but we also recognize, just like we were saying with the S&P, that these are all at the edge of a cliff, and if any bad news catalyst really comes in early this week, if it just creates more selling pressure than the buyers can handle, we could see things turn relatively weak quickly. Next year, when we take a look at the ISE Syndex, which is symbol SIN, the Syndex has continued to consolidate around this 121 level, where all the lows have come in over the last month. Again, just like all the other markets, the consolidations have really run their course, and if they're going to bullishly break, they're going to have to come off of these levels. Really, at this juncture, any aggressive selling that comes in early this week that pushes the markets below these lows, we could see the Syndex very quickly want to consolidate down to the lows around the 113, 115 area on the downside. Next year, when we take a look at the ISE Home Builders Index, which is symbol RUF, the home builders have continued to consolidate, banging their head in that overhead resistance around the 710 to 730 area. And we again were identifying the relatively bullish price action that we've been seeing, but the bulls have not been able to exceed those highs. Again, we're at a situation where if the support lines around the 680, 670 area on the downside give out, it would certainly open the window for home builders to consolidate all the way back down to the $6 area before the next major line of support. Next year, when we take a look at the ISE Natural Gas Index, which is symbol FUM, it's been bouncing its head on overhead resistance around that 120, 123 area on the upside. At this juncture, it continues to consolidate above those highs, as if the whole market again goes through any consolidation, it would be very natural for the natural gas index to test that 106 to 108 level. But if the whole market in a broader sense sells, particularly if driven by very strong US dollar, we could very quickly see that natural gas index make a break that could see the 100 or even the 95 level on the downside within weeks. Finally, well, we'll take a look at that ISE Mini FTSE 100 index, which is symbol UKX, and the London market looks very similar to that of even all the North American indices. And what I want to do is emphasize that in general, over the last 2-3 weeks, we have tried to remain relatively optimistic and positive that the bulls would be able to emerge on the upside of all of this and actually allow the market to rally into the traditional year-end rally. And while again we continue to want to see a bullish outcome to this market, we are at a level where we have to be aware of the risk associated if the whole market rolls over off of these levels. And the FTSE is no different. Really at this 535, 545 support line is the kind of levels where support should hold. If the selling really accelerates in any way below 535 on the downside, it would really open the window for the FTSE to consolidate all the way to the lows of October, which would very quickly put a wet blanket on any bulls rally that has been trying to get underway. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.